What's up, everybody? So today's just a chart watching session. I'm not going to do a whole lot. So if you guys are kind of like watching for the first time, I've been talking about this for a while. That on days of NFP, I don't like to be in the market a lot. I really don't like to be in the market the Wednesday after trading after the Wednesdays of weeks of FOMC and NFP because they're crazy. We also have an elections coming up next week. I know if you live in the United States or if you live in a swing state or swing state, you've probably been getting hounded with ads over the past couple of weeks. But really, I just kind of wanted to use this time as a chart watching session because, just to kind of see what the market does, what it actually, what tendencies you might see during these things, and kind of use it still as a learning opportunity. If you're kind of wondering why there's actually a trade running, it's because this is actually a paper account. So I'm not actually up $60,000 right now. Trust me, I would not be live if that was the case. And so really I just kind of use these opportunities as, opportunities to maybe if I want to have the itch to trade, I demo when I've already hit my goals for the week. So for this week, I had a trade earlier this week, a $2,000 day on Monday, I think, or Tuesday. And so really just kind of just called it a week after that. So everything you see here is just paper. It's not real. But still, you can still obviously trade with the same ideas and tendencies. So I'm actually going to take a second and throw this link in the chat so everybody can jump in if they're not already on. Doesn't seem like we have anybody on here. Yep. So I'll drop this in there right there. But yeah, so just kind of a lot of times I will take positions in trades just to kind of get a better understanding or just to kind of, once my goals are already done for the week, it's not going to hurt me, right? This is a paper trading account. It's not my real one. It's not the real accounts that I have, whether they're funded accounts or the actual live account that you guys are seeing me build. But it's really just there to kind of help me kind of scratch that itch that I might have once my goals are hit and I don't have to worry about risking my real actual capital. I actually think that every trader should have a good like demo account or practice account they keep on the side. Some people just buy extra challenges and try to pass those. Occasionally I do that too, but I have my real accounts and my main accounts that I keep totally separate, and they're very goal driven, and I don't risk them. Once I've already hit my goals for the week, I try not to expose those to the market again. So I'm not one of those people that says if you're a full-time trader or a long-term trader, you shouldn't have a demo account on the side. So I just kind of want to watch price action over the next few minutes. This is my target for this particular setup. I really want to see what happens here. So really, I'm looking at price to run into this 4-hour fair value gap. It'll be this CIVI here. The target is just slightly lower than that. I've actually been in this trade since yesterday PM session. Again, visibility, middle line border, red. Let's make that red for a CIVI. So there's a couple things that I saw last week, and we'll talk more about kind of entries and things like that over the next few days. But the main thing that I saw over the past few weeks, actually yesterday's PM session, was how we really came down and hit these lows and really failed to go lower. And once we broke structure and took out this high here, I kind of knew that we potentially could be rising up. So I think after yesterday's PM session, I ended up entering into a position here and just kind of been holding on to it for the last day or so. Again, my target really is this 4-hour, really this high here on this wick, because that represents the 4-hour fair value gap. So again, jumping back to that 4-hour time frame, I want to see the market come back into here. Once it hits here, I don't really know. And I mean, to be honest, again, there's an election that's going to happen next week. We're in the middle of an NFP day today, so I'm not really trying to take any positions. It's not investment advice. I mean, I'm not even trading with a real position. So this was just, again, for completely fun. So we're actually rising up. So what I like to do sometimes is hop down to these smaller time frames, these sub 1 minute time frames, and see what happens. So right now I'm on the 30-second time frame. We're really mitigating the rest of that fair value gap right there. I wish I would have kind of been able to detail this at a little bit more as price was flowing up today. So I could have called this entire run. But ideally, I want this to stay above or stay inside this fair value gap. If it doesn't, then I potentially might close this. I do think there's a potential for us to run back down into this zone. And so if this was a real situation and I was up $50,000 on a trade, then I would have moved my stops to break even a long time ago like that. I do think that price will hit this level. I just don't know if it'll come back down here first. There's a lot of trend line liquidity that's being built up. But ideally, I want this to stay above this gap, and ideally above consequent encroachment of this fair value gap. So I'll be looking again as we measure this run at consequent encroachment of this wick. So ideally, if we're going to keep bullish and keep heading higher for bullish prices or more bullish liquidity, then also I want it to stay above this fair value or this consequent encroachment. I treat wicks like gaps. So ideally, this is the consequent encroachment of the middle point. The algorithm will recognize like 50% ranges of all gaps and wicks. And a lot of times it treats a gap or wick like a gap. And it kind of is, if you think about it. And so ideally, if we're going to get to this level, I definitely want to see price close above this. If we get to this level here and we start seeing price fail to break above this, then it could be a sign the market's going to reverse. So just for shits and giggles, I'm going to add another 5 contracts on because we're respecting consequent encouragement. I really want to see how price reacts at this level. And again, since my target is a little bit, see, I don't like that. I don't like how we didn't respect it. So let me hop down to the 15-second time frame and see what's going on here. Bodies are still respecting consequent encroachment of this wick. I don't like how this trend line liquidity is built up. So if we really fail, I would say like worst case scenario, if we don't respect this volume imbalance here, then I probably would close this position out, and whatever's I'm up as what I'll just be up. So, but again, see how we're dancing around consequent encroachment, and we're really having a hard time breaking that level. This is what I mean by the algorithm respecting 50% ranges on wicks and fair value gaps. So it's a really good sign that we're respecting this. So the next level that I want to see really taken once we can come back out of this consequent encroachment is going to be these wicks. Let's see. Yeah, I'm going to close this because I think we're going to come all the way back down, or we could come all the way back down. Yeah, we definitely could come all the way back down again. So I'm going to close this out. Actually going to move stops away. So 12 grand is locked in. A lot of times I'm using this as an exercise to see like, yeah, I don't like this at all. So I'm going to lock in at 30,000. A lot of times I use these practice accounts just as exercises to see what's going to happen. Or just to kind of give myself more experience and more reps in bad conditions. This is not this next week is not a condition that I want anybody even trading in, even if it was a demo, because there's going to be a lot of crazy price action over the next week. So let me hop back up to the minute time frame. Ideally, my target that I wanted to see price hit is this level right here, this fair value gap. So let me go back to the 5 minute. There's nothing really here. So yeah, now that we broke structure, I would want to see this at least continue to go down. The area that I'm kind of thinking that we could run to is this zone right here. This is the low of the day. Yeah, it's about the low of the day. So from this low to this high. Yeah. So I think we could come back down here. I would want to see price retrace to this range. And then if it doesn't, it's like, oh, well, you're going to have these, like, it doesn't matter how good of a trader you are. You're going to have these runs where price is going to take out a level that you're going to feel uncomfortable with. And it's, especially if you're up, it's better just to close out or move your stops all the way up. I think if I probably would have closed out regardless. Visibility, background, red, it's a civvy. So I think we could see something like this. We come back down there. And a lot of times, even if I don't have any money on or any positions, then what I usually do is I usually try to, is this the new, yeah, it's the new day opening gap right there. I don't think we'll come back down there though. What I try to use these sessions for is really just to kind of project and see what I think price is going to do, right? Whether I have a position on or whether I don't. And then also to see like how these concepts are playing out in real time. Because a lot of times, most of trading is your confidence and your belief level when it comes to a position and the reasoning as to why it should go there. So a lot of times people don't have a good understanding of the market. So they just think that the market should do something. Because it broke resistance or broke support and or they don't know where the market's really trying to head to. See, that was a great fake out. So like that was a great fake out. So I locked in. I would have been in the position since yesterday, but that was an amazing fake out. And it really just kind of depends on your goals. If I was, I think my target was like $80,000 like dollars for that particular trade. So basically cost myself 50 grand if I was trading with real money. That was great. Green. Let's do this. Green. That was a good one. So we'll take that high out, and that would have been the high right there that we would have run into. You're gonna have positions like this. I tell everybody, like, the biggest thing that you want to do as a trader is you want to get a piece of the run. It doesn't really matter if you get the entire run. Like, even if my target was all the way up, wherever I was just at a second ago, all the way up here, getting the majority of that run or a chunk of that run, you don't always have to get the entirety of the run. And I think a lot of times, like, I used to be like this a lot. Like, I would try to come into a trade and I would be mad if I got out early. Let's say I locked in $300 when I first started trading on a trade. And I would get out of the trade and I'd watch the trade go up another 10,000, I don't know, points or pips, and I could have walked away with like $600 or $700 or something. I don't know, something just to give you numbers. I could have doubled my money or tripled my money, and that money I left on the table would always leave a bad taste in my mouth. Versus like the money that I actually did take, right? And so that would cause me to kind of do dumb things like, try to go back in on secondary runs and things like that. So the reason I chop back in is because, well, if we trade over this volume imbalance here, I'm going to hop in with another couple positions. There we go. I want to see this close above. Where's my stop loss at? I'm going to do that. I'm going to have it here for now, but I really want to move it here. I think we're on the right track for this. Right there. Yep, there you go. So that's the target right there is 5,000. Or that 26,206 level. And I'm doing this on a 15-second time frame. This is way too fast for anybody that's new. Probably way too fast for a lot of people that are experienced too. I want to see that happen. And I really want this to run for this level very quickly. Move stops up here. Really, I should move this to break even because I don't think we're going to come back down there before we take that out. So we'll take that out, high out, and then we'll call it a day. Boom, it's 5,000 extra right there. So for the people that say I don't trade live or I don't take positions live, there you go. But I just do not advocate trading in these market climates right now. A lot of stuff going on. Once we're here, I don't know what's going to happen once we hit here. I think we could potentially fall over and go lower, but I'm not going to be involved in that. So you guys just, the money is not the important part. The ideas behind the trades are the most important things, especially since none of this is real money today. But the thought process behind these trades were, yesterday I really hopped in this position because I saw the market really fail to take out, really break below this low. And so I figured, since we had a bunch of attempts, once we kind of ran this level and we broke structure, then we probably were going to start to transition away. This is terrible price action. It's choppy. It's disgusting. It's not something that you want to be in. But yeah, so it's not something you want to be in. That's terrible price action. But it's 1013. So I'll be curious to see like if we drop out of this or if we break structure, kind of fall the other way. This would have been a good one too. This is probably NFP. Yeah. USD. If we were bullish on this, then I would want this to stay open, but I don't think we are. I mean, we already inverted this 15-minute fair value gap. Yeah. I would be trying to sell and probably look target these lows right here. See if we can come back into this daily gap here. We did kind of close above this. Yeah, I would say I would want us to come back down to this range, but it really kind of depends on how this day closes. This is the daily time frame. It's a little bit bigger. I don't even think I'll have projections going into next week, because I don't really even know what the market's going to do, and I don't want to set people up for failure. 5-minute time frame. So we traded back into this range here. I would want this to come back down and just kind of keep on lower. What's up, Tony? Yeah, if I had to guess, especially after we inverted this hour fair value gap here, or 15 minutes, the 15-minute fair value gap, I think that kind of lets us know that we probably were going to continue to go lower, and we started to respect consequent encroachment of this daily fair value gap here. I think we're definitely running down here. So if I had to pick an opportunity to enter, I probably would have did something like this, like very short scalping opportunity. And I would enter here, put my stops below the high, and then take it for this low right here. It's a 1-to-1. It's a terrible risk to reward ratio. But I would want to see how we react if we take out those lows. And then I'm gonna hop back to NASDAQ and see what happened up here, if anything. Yeah, we should run higher. So ideally, like in these situations, yeah, I mean, my target is the entry for this, or the opening at the bottom end of that gap. But like, yeah, it could run higher, but that's, those are things that you just got to live with. Like even the idea, if you guys watched when I first came on the stream, my target would have been $80,000 for that. And I think I ended up locking in 40, 35, 40, because I cut the trade a little early. A lot of times you don't know when those fakes are going to happen. So you kind of have to just manage the position. And if you get stopped out in profit, take the profit, call it a day. It doesn't matter if it's $300 or $300,000. It's money, right? So treat it, carefully, wisely. Yeah, back to euro. Yeah, so this is exactly what I wanted to see. So I'll kind of just wait. I want to see what happens when we take out this low, or how we react to this wick here. Right, so in this case, this wick is at kind of existing like a gap, and I want to see consequent encroachment of this gap violated on the way down. And so the idea that this wick is being respected, it kind of serves the idea that we could potentially go higher, but I don't want to see that happen. I want to see it inverted, so I got to wait and see what happens. So we got about 7 seconds before this candle ends. If I have an ideal scenario, I want to see this market go back into this gap and then go lower. Just like that. we'll see. But if I had to again, if I was looking for a target, it would be the end of, it would be this low, which is actually the low of the day too. So that's what I would want to see happen. And then for it to run lower. And I'm going to move that target just a little bit higher. I like having targets that are a little bit higher, or take profits that are a little bit higher than the overall target, because it kind of gives room for, I'm a Forex trader at heart. So the spread, right? When we talk about spreads, they're not so much as much of a thing in futures, but the spread is a real thing in Forex. So I just got in the habit early of making sure that the stops were a little bit higher. So I want to see this. So now I'm looking at this again. We violated consequent encroachment of that wick, meaning that we traded past the 50% level. So I would imagine it's going to continue to run for these lows. It's giving us what we call relative equal lows right here. Those lows right there. So ideally, I want this to continue to run down. Same thing, right? Looking at these wicks, I want this to stay below this 50% level of this wick, especially since we violated not just this wick, but this wick as well. So I'm very confident that we're going to at least dip down below this low, right? So I'll just draw that line there so you guys have that. Yeah. Right. And so I want to see this. That doesn't look right. That looks better. I think we'll come back down to the low of the day, but there's some fair value gaps that could be getting filled. So now what I'm watching here is I want to see, now that we took out these lows, right? We traded past these lows, these relative equal lows. I want to see if we can stay above this consequent, or stay below consequent encroachment, because that'll let me know if if this bearish trend is very strong. And if we fail to do that, plus we fail to do that, and we also kind of close above this consequent encroachment, then I'm going to potentially close this trade. So I just need to see this, where this candle will close. Trading, honestly, is man, trading is a boring thing to do. Like when you when there's no money in the line, this is like the most boring thing ever. But you're basically learning how this game works, what are the rules to the game, and how this computer program works. So now that we closed it below this, what I'm going to do is I'm going to move my stop. Should have did this a while ago, but I'm going to move the stop. It's like right above break even. So it'll be a profitable trade regardless, even if it's just a little bit. But I want to see how we treat this gap, or how we treat this consequent encroachment. Technically closed above it. So I'm just looking to see how we react to this. We also have a gap up here that we could potentially run into. So I'm going to drag this down and extend this. This is the 3-minute time frame. So something like this. And so like once you get used to whatever amount of money you're trading with, once you get used to the idea of managing that, like the same process. It doesn't matter if you're trading $300 or 300,000. It's the same thing. Tony Gold says, Canada coach, I'm impressed with the things you did last month. I'm starting to mark the fair value gaps and gaps. Your style is amazing. I mean, I've had great mentors, man. So, and I put a lot of work in. So ideally, best case scenario, we would have came back up to this gap and then retested it and went lower. Doesn't look like we're going to get that. Yeah, doesn't look like we're going to get that. So what I'm looking for is I want to see price run below these lows and stay below these relative equal lows and that low that we just took out on its way to this black line, which is what would have been our overall target for the day. So again, we just took out these lows. And if you think about liquidity, right, under these, I talk about this concept a lot. Under these relative equal lows, this is something I didn't talk about last week. I'll probably bring it up this week. Under these relative equal lows is going to be sell side liquidity. It means that there's money under here that the market's going to want to go get. And so the thing you need to ask yourself here is, we're in what's called a sell model. And I'll talk about these again throughout the course of the mentorship. But this is a market maker sell model, meaning that the market is hunting for sell side liquidity. Anytime you see a down trending market, it means we are consistently trying to hunt for new levels of sell side. That means we're going to continue to take out old lows and hunt for old fair value gaps. So if you look at the fair value gap right there, see how we dipped into it right there, right? So overall, though, the target that I think we're going to hit is the low of the day. When we're this close to the low of the day, which is, again, this low point here, I think there's a really strong chance that we'll come there. I don't like while I'm managing this, I don't like the fact that we haven't been able to take out this low yet. And that's kind of something that scares me for a potential reversal, because we hit this level. We set a level here, a low here. We came back down, set as relative equal lows, came back down, hit it. So we grabbed that money. We came back down and took out that low again. And I don't like that. And I would say if we violate this fair value gap, like close above it, and that's probably a sign that we're probably going to strike bullish. So I'm really looking to see how this plays out. Because a lot of times you'll set a target, right? You'll see like an obvious low like this, or a prominent fair value gap you think market might trade to, and it might not always get there, and that's kind of like the same thing that like I was talking about on NASDAQ a couple minutes ago, is that is that I use these target levels as opportunities to uh, um, kind of like trade towards. It's not always about hitting the target. It's about hitting the liquidity that's on the way to the target. And sometimes if you're lucky, not even lucky, but if, more often than not, if you have the direction right, you're probably going to be able to take out the high or the low of the day. That's, and so I'm aiming for this, but I don't like the fact that we haven't been able to break through this level here. So I do like, kind of as I'm looking at this technically, right? I do like the fact that we have an order block that's right under the consequent encroachment of that level there. And I think it just took me out. So whatever. So I was able to lock in some profit on this trade. And maybe I was a little premature. But we pretty much had a break in market structure, a sweep of liquidity. So I wouldn't be surprised if we go back up. If I go to the higher time frames, I still think we're probably going to come down here. But a lot of times, again, trading is not always about hitting these big targets. Sometimes it's about really just like trading on the way to a target and scaling into a position, scaling out of a position, and getting, a little bit. So you saw both of those trades that I took were technically winners, right? They both technically, I made money on both of those. One was a $30,000. The other one was a $300 one. But it's not necessarily, they didn't necessarily hit either one of their targets, I think. Well, the second trade I took on that NASDAQ today did. It's not about hitting the actual target level that you call out. It's more about being able to take a trade, have a position, be able to take partials out on the way down for the runs, and you'll walk away with money, So like, even with that, I mean, like that trade, that was just a, BS trade, just to show an example. I mean, you still were able to lock in 300 of $1,100, right? So like, it's being able to scale into the positions when you get the opportunity and scale out when you start to hit target levels. When you realize that every low, the whole point of the market is to foster trade back and forth between buyers and sellers. And so if you have old lows, right, we know there's going to be sellers underneath these lows, and we're in a selling position. We want to unload some of that position as we get to these sellers. We want to sell to sell to the people that are willing to we want to buy out of our position to the people that are willing to sell below these lows. And so it's not always going to be about hitting these home run trades. A lot of times it's going to be very technical trading. Like, okay, cool, I see some sellers here. I see us take these levels. Let me get out of a little bit of a position here. Let me move my stops into profit here, and just kind of be very technical. Now, I still think we're going to come back down here, but it's better sometimes to lock in something than have this thing completely go against you. And I would say if we are coming, there you go. If we are coming back up, then I was going to say, I want to see this get inverted. This fair value gap that was created, it's technically a BISI. So if you guys remember from the class that we talked about BISIs and CIVIs, I want to see price close below this gap and then potentially retest it on the way down. So just like this. And that makes me a little bit more confident that we're going to probably come back down here. And we're doing this at a rapid pace and speed. So if I was in real positions, like if I was in a real trade today, I probably would have held that. But it's whatever. So ideally, see how we're having a really hard time closing outside. Like we're closing outside this gap. So I like that. We retested it. So I want to see this continue to go down. I would say if we find ourselves closing back inside of this gap and respecting certain levels like consequent encroachment, then we could potentially go lower. But the fact that we're kind of just really wicking off of this low kind of lets me know that there's more liquidity down here that we might want to go grab and get. So I'll be watching that, but ideally I want to see something like that. If I go down to like the 30-second time frame. Yeah, so something like this at worst, something like that. So the number one question I ask myself when I'm trading is where's the money? Where's the money? What money did we just pick up and where's the money at that we're going to go get? And if you can understand that, then you can start to build a framework for like how the market's going to run to get that. And so I don't like this because we're closing, we're now respecting that gap again. So I would say if we close above this, then it's probably not going to get all the way down here. But I still would like the market. Like I personally would like the market to go down here because it's low of the day. I feel like it's a very prominent 4-hour low. It's on the way to this daily fair value gap here, right? So I think we could run there, but I think that's the low. Yeah, the low the yesterday, low today. So I think we'll ultimately come back to this. And this is kind of on the way to that. So yeah, there you go. There you go. There you go. Thing fell out the sky. So this is what I do for chart watching sessions, right? I outline a scenario I want to see the market hit or grab, and then I kind of map out prices it gets to that. I could have easily taken a real trade on that today and probably walked away with 2 or 3 grand on the account that you guys have seen me build. But it's not always about having money on the positions. It's about being able to build your skill set. And a lot of people are running, they're trying to make money way too fast. And you got to be able to build confidence in this stuff because it's one thing to go back and do it in hindsight. It's a totally different thing to map out trades as they're hitting, as they're being played out for us, and outline which thing is going to happen next based on the concepts that you're learning. So it takes a lot of practice, and please don't rush the process. Like the next year of your life is going to be a wash. Like if you learn these concepts, and you can master them and start trading on them in a year, cool. You're better than average, but most people aren't. And so don't put that expectation on you that you're going to learn all these things and then you're going to the next, as soon as you learn them, you're going to be like, you're going to get this. It takes a lot of chart watching time, coming to the market during your choosing session, taking notes, and then figuring out what you did wrong, figuring out what you did right, learning how to trade through the mistakes that you have. Like even yesterday or Monday, I think I took a trade and I made a mistake. I misjudged something and it cost me like, $400, $300 or something like that. I was able to make it back, right, the next day, right? But it's being able to see those mistakes, have those mistakes, and not mess up when you see it. So this was the low of the day that was taken, right? So we know under the low, any lows or highs, it's going to be liquidity. And the biggest liquidity pools in a given day are usually going to be above the high and the low. And the reason for that is because a lot of times what happens is the market makers, the big institutions and the big hedge funds, they don't go sub-minute. They don't go to the minute time frames. They're not on the 15-second time frames. They're purely looking at a daily chart or a 4-hourly chart or like these higher time frame charts. So when they see the market, all they're looking for is how does the day close? How does the day close? How does the day close? And so they might enter into a position, I don't know, just to give you an example, doesn't matter. They might see this candle close like that, right? And they might put a stop loss above that high like that. And they'll say, oh, this is the daily high, so let me hop in. So the same way that we trade these 1-minute time frames, these 15-minute time frames, they're looking at the daily. So these big hedge funds and big institutions are going to have a lot of liquidity above and below the daily highs and lows. And because of that, we know that a lot of times the market's going to run for these levels because the market does one thing. It's supposed to target liquidity, right? It's always moving to and from liquidity. So again, where's the money at? Where's it's going? And the most money you're going to see is over these old daily highs, daily lows, imbalances, that type of thing. It works in every time frame, but there's just going to be more money there. Again, I want to see the market run for this low, this fair value gap. One, because you got a series of relative equal lows there, but then also if you go back to the daily time frame, there's a huge green box, which is a BISI, right? A daily BISI. And so once we get here, this will kind of dictate what happens next. Ideally, I think this market's going to keep running lower. Like I would like to see it come down here eventually, but really depends on how the SIBI works. Or the BISI works, I'm sorry. Let me go to these comments. Yeah, exactly. Education is the most important. It's the most mandatory thing for that very reason. It's like, don't rush this process. If you treat this like college, and the first year of your life, you're like, I just want to learn. I just want to learn and watch, learn and watch. The second year of your life is like, I want to demo, start and figuring out like what your strategy is. The third year of your life is like, okay, maybe you had a break-in year as a trader, or you took a lot, losses for a year. Third year is kind of where you start to figure it out. The fourth year, right, is like your graduation year. You're a senior. You can start putting this together. The problem is that people want to take they want to slow things up, man, or they want to speed things up and make it so they in 6 months, they know everything, or in a month and a half they learned everything they didn't know about trading. And it's like, that's not true. That you wouldn't become a doctor in 6 months. You wouldn't become a lawyer in 6 months. You're still trying to figure out which way is up. So it's like, take your time with this, but then putting this in perspective, think about what I was able to do on that account so far, right? 10K account, it's 30 something $1,000 in 4 months, right? Now imagine if you gave me 4 years to build that same account up, and you're gonna watch me build. That's gonna be my personal account, I think. So you're gonna watch me build that up over the next few years. But imagine where that account's gonna be in 4 years, right? And I think people just need to think like that, because if you rush the process for 4 years and you're no better than where you started, you might as well have just taken your time and did the process right. So again, I think that's all I'm going to do for today, though. I'll stay on for a couple more minutes to see if we do actually, in fact, get down to this level. Not really pressed about it, but I know next week I might not even do a call this weekend, or I might do a very light call this weekend, because I know that this next week is going to be really crazy. So I'm not even going to worry about trading next week. If you're an active trader and you live trade, don't worry about the markets next week. Like, just take, it's your vacation week. You could even take 2 weeks off, because it's going to be crazy. Regardless of the outcome of the election, it's going to be very crazy in the markets either way. And the market makers, the people that control price, they're going to use this as an opportunity to move price wherever they want to see it. So this is definitely a time of manual intervention. So like, don't play around with that. So that's all I got. I'll stay on for a couple minutes. If you guys have any questions, just throw them in the chat. If you're watching this after the fact, hopefully you get some value from it. I was able to outline like 3 situations, 2 trades on NASDAQ and 1 on Euro that would have been, winners had they been taken with real money, and ones that have been winners when we were taking them with play money. So hopefully y'all enjoyed that. Sorry if you guys are just now joining. We're actually about done. Um, so I basically took everybody through a couple situations. The first one was on Nasdaq. Basically was outlining how I ended up taking a position yesterday on again, just disclaimer that this is a paper trading account, right? It says paper trading. Um, the real trades that you guys see me take in the account, those are going to be like the AMP Futures account. You'll know because it'll usually have an AMP Futures logo. I usually screenshot it on mobile and it'll have an AMP Futures logo there. But really basically came into the situation seeing how price failed to really it took out this level of sell side liquidity and then kind of swept away from it. So just looked for an opportunity. I think it was somewhere in here, some down here. I can't remember the exact locate opportunity yesterday. And then pretty much held on to those positions through the high here, which was the low end of the fair value gap that we saw at the beginning. And I think based on this, I think we're probably going to continue to go. We could potentially be running back down since the overall the overall time frame is bearish on this. Yeah. So I think once we took out, actually, yeah, I would not be surprised if we rejected off of this and just kind of collapsed. But anyway, so yeah, so that was the first trade was taking things to an old high. Second trade was a continuation of this. I think I hopped in right here and took it to the higher. So for a short position there, and then going to Euro USD was just outlining a potential setup here that I wanted to see the market do, which was run for this old low of the day there. So today's low. And just kind of outlining the idea here that there's going to be a lot of liquidity that sits above the daily highs and daily lows in the candles because market makers look at things from the higher time frames. They don't necessarily get this low when it comes to trading. So they are going to put a lot of liquidity above and below the daily levels of a candle, right? So that was kind of all we talked about. But yeah, so hopefully you guys enjoyed all this again. And then if you have any questions at all, feel free to hit me in the chat. But I want to continue to use these opportunities as we can to just kind of outline things. If anybody, especially if you're my mentorship student, like my actual mentorship, previous mentorship students, if you guys have any questions at all, just hit me in the Telegram. And I can break down why certain levels, we were targeting versus, and how we manage to trade. If there's any questions at all, just I'm always here for you guys. You already know that. So I'm gonna go ahead and end this. If you guys have any questions, let me know. Hopefully everybody has a good weekend. Stay safe. Get out and vote because that's the big thing right this week. And then yeah, just don't trade next week. Take your week off. Watch the markets. Watch how crazy the markets get next week. And be happy that you weren't in them. So, all right. Peace, guys.